Hey, what's up? I'm Cody the Coin Raptor. ARK Invest just released their December Bitcoin monthly report, and I'm going to break it down for you. But before we get to that, be sure to smash that subscribe button to see my latest content. Leave a like if you like this content and would like to see more. So, ARK released this a couple of days ago. I said I'd get to it, and we're going to talk about the Bitcoin monthly report. All right, going all the way down here, we're first going to hit the summary, and I'm going to go ahead and give you some of my takeaways here. So ARK points out here that the investor cost basis is $17,440. That is the realized price, basically minus mining fees as well. So the investor cost basis right now is at $17,440. They expect that that's going to be very strong support in the future. And right now we know that Bitcoin is already over that point, almost going to 19,000 today. But one of the most important things they point out here is that DCG, or Digital Currency Group, is the biggest question mark in the crypto industry after the publication of Cameron Winklevoss's open letter to Barry Silbert. And if you guys are curious about this, I made a whole video covering this in one of my news videos in which I talked about what specifically he's saying here and what he's alleging that Barry Silbert's been doing. Next, also very important, miner outflows have decreased 44% during December, which we're going to touch up on more a little bit later. And that is something that is extremely important right now. So keep that in mind. All right, so we're going to go here and we're going to talk about network activity. The most important thing to talk about with network activity is going to be the long-term holder supply. The long-term holder supply right now has changed significantly. They've marked it up. They've said it's bullish right now. And we are also going to talk about the reason why that's important here in a little bit. Miner revenue has been going up, which is good for miners. And however, the active owners has actually gone down a little bit. They've downgraded this to bearish. So that's also something to pay attention to. Now, in regards to the market cost basis, they've put this at 19,776 or 19,776. We are still below this level, even though we've just gone up and just basically Bitcoin has gone up and kissed that 19,000 level and come back down, but we are still under this market cost basis, or AKA the realized price. This is basically the totality of all the Bitcoin and how much it was purchased at, and then they basically average that out to about 19,700. All right. Now we're going to go ahead and talk about some of the more important sections here. First, starting with the Bitcoin long-term holder supply. So this is the Bitcoin supply last active 2 years ago or more. This is incredibly important. I've talked about this multiple times, and that if these holders are not moving their funds, that puts a floor on the Bitcoin price. Okay, they've said the percentage of supply that last moved 2 years or more closed the year at 47%, nearly at an all-time high. And as we can see here, we can see that this level right here is in line in some cases with other bear market levels. Like, for instance, you have the 2020 around this area right here, and then 2018 around this area right here, very close to both of those levels. And so what we're seeing here is that these holders that have Bitcoin have not moved in a while, right? So they're saying that it's at 47%. So what this is basically doing here is that it's proving to be kind of a catalyst for bullish price action going in the future. And so this report came out a couple of days ago, and if you were reading this report a couple of days ago, I would say this is pretty spot on, because we have seen a just dramatic move to the Bitcoin price recently, like I said, up to about 19,000. And so this right here has been kind of a precursor, and they're saying that because the supply was last active 2 years ago or more, and it hasn't been moved, that it puts basically a floor under the price. All right, so they've also come out here and say that between the levels of 16,000 to 17,500, there has been 1.5 million Bitcoin changing hands. All right. So the reason why that's important is because they also think that this 16,000 level, and between the 16 and 17,000 level, is going to be a strong area of support. And so if you look at like a volume profile, for instance, that shows you what the volume is like at each level of the price, we could say here that that this area between 16,000 and 17,500 is at an area of extreme support, or I would say extreme demand for buyers to come in and step in. And I definitely would agree with that. Next, we're going to talk about the spending behavior. All right, so they talk about Bitcoin time-weighted turnover, aka coin days destroyed, and basically what they're saying here is that this essentially boils down to holders remain strong despite the multiple frauds and gray swan events during 2022. This is very important when we start talking about long-term supply and when these coins are moved. But what this breaks down to is the fact that these long-term hodlers are not selling, even though we've had these frauds and gray swan events like the fall of FTX. They are not being moved by this. All right, and then they also talk about the number of addresses with a non-zero balance. They say this stalled, and the reason for that is because of new investors deciding whether or not they want to come in or they want to stay on the sidelines for the time being. And so they put that as neutral. And they also have another neutral event here in which they're saying that the monthly volatility is fairly low, which is unusual for Bitcoin. Again, this is what we're talking about for December, right? I think that in the first quarter, we've seen a pretty dramatic move in the Bitcoin price so far. And they've actually come out here and they've said that they believe important market direction may come during the first quarter of 2023, given the potential impulse of the price move. And that is something that we have seen for sure just in the first week, 2 weeks or so of the new year. We've seen a pretty dramatic increase to the Bitcoin volatility and the Bitcoin price. All right, so then I'm going to talk about state of the industry. And what they've talked about here specifically is DCG. Again, they kind of break this whole thing down, and they're talking about that open letter that Cameron Winklevoss has published and sent to Barry Silbert. And again, if you guys are interested in this, I made a whole video on that. Definitely recommend you go check the video out. But at the bottom here, I highlight the most important part, and the most important part of this is the fact that the Grayscale Bitcoin Trust has closed the year at a 45% discount to the Bitcoin price. All of this uncertainty surrounding DCG and Grayscale by proxy, because DCG owns Grayscale, has caused the Grayscale Bitcoin Trust to have a 45% discount to the actual Bitcoin price. So that's also something that I've talked about in the past as well. And I'll also talk about that as well in my closing remarks and my summary of this whole report. And this is incredibly important to point out here because of what ARK has been doing with their GBTC. All right, and so they've also said that Coinbase has claimed up to a 40% market share after the fall of FTX, and they view that as bullish. And so the reason why I think that this is bullish is because Coinbase, unlike FTX, is a publicly traded company, and Coinbase is required to undergo financial audits. Unlike FTX, which was a private company, they don't have to do those audits. They don't have to meet certain standards of regulation. And so the reason why it's bullish in their opinion that Coinbase has this is because Coinbase is a lot more dependable. The data that they have, the information, the assets on the balance sheet are verified and regulated. So that's the reason why, as far as I can tell, that they view this as bullish. So miner outflows have decreased 44% during December as consolidation picks up. Again, this is also something I've pointed out recently, and they've said that they've had a significant reduction in miner outflows. So these miners that are mining Bitcoin have been holding on to their Bitcoin as opposed to selling it, or in this case, sending it to exchanges to be sold. Okay, and that is incredibly important because as the selling pressure on the Bitcoin price decreases, then you have less capitulation by the miners, and so thus they don't have to go and sell at a loss. So it's kind of like a vicious cycle where the price goes down, and then miners are under pressure, and then they sell, and they cause the price to move down even further. So the reason why this is bullish is because miners are basically less under pressure than they've been in the past. All right, so that's it for the Bitcoin report. Now, I want to go ahead and get to my own personal opinion and my own personal summary of ARK's findings here. So this report has been an overall bullish report for Bitcoin. ARK points out that long-term hodler conviction is extremely strong right now, despite all the FUD and a potential FTX contagion to different sectors of the crypto market. ARK pointed out that they expect big volatility in Q1 this year, and I believe that we've already seen much of it as Bitcoin has recently touched 19K. They point out that miners are growing in strength and efficiency, something I've also talked about in my mining videos. The most pressing issue from this report is the uncertainty surrounding DCG. This is the part I find the most interesting, and I've already covered the letter that Cameron Winklevoss posted on Twitter. I think right now it's important to draw a distinction between DCG and Grayscale. Even though Grayscale is the parent company, ARK Invest has been buying GBTC heavily in the past quarter, and the uncertainty around DCG has not affected their position that GBTC is undervalued, okay? All right, so that's all I've got for you guys today. I'll be sure to put the link of the report in the video description. Now, what do you guys think about the ARK's report? Are you guys as bullish as ARK and Cathie Wood? Leave a comment below, and I'll catch you in the next video.